from the letter this morning. But as is usually the case, Mike Lee, Jamie Dimon notes the world has changed in a more dangerous capacity. He also talks about the wide open border and the global economy and the U.S. economy. We know what the economists there at J.P. Morgan are saying now. Michael, your reaction?
Look, I don't view this tariff onslaught and the market sell-off as negative as obviously the market does, or the what you're hearing out there from economists talking as if a recession is somewhat of a certainty. I don't think the American public realizes how little we export to the world versus what we consume here. We are we're 1/6 of global trade in terms of consumption. And when you take out defense, as well as Boeing airplanes that we sell to the rest of the world, our trade deficit is massive, like 1.7 trillion, and we're only exporting about 1.6 trillion, which is 3.5% to 4% of our GDP. That's probably going to take a hit from all this reaction. But like, I'm interested to see your interview with Jamie to hear him talk about this, because this is a massive overreaction in equity markets. And obviously, these actions are definitely negative towards commerce, towards free trade, towards economic growth. But I think this is one of the largest overreactions I've ever seen in my life.
Yeah, I agree with you, Mike. I mean, look, this market is stretched to the downside. There's no doubt about it. The market is pricing in the worst situation, even as President Trump has begun negotiations with a number of countries. Where specifically would you find value right here, Mike?
Oh, like the entire AI complex. Like, you look at a name like Marvel. Yeah. His stock was at $120 and now it's sub 50. The problem with NVIDIA, with Marvel, with AMD, with Broadcom is capacity. They simply cannot meet their customer orders. Are you telling me, because of this sell-off, because of the announcements from Trump last week, that NVIDIA is still not going to have 15-to-1 demand for every chip they sell? Maybe that goes to 10-to-1. It doesn't matter. Like, you're drinking from a fire hose here. The way data is consumed and processed and used on a go-forward basis is forever changed. Maybe this slows it down slightly, but I doubt it. Look, if you don't need the money in the next 6 months, 12 months, 2 years, you have cash on the sideline, this is going to be proved to be one of your most epic opportunities to get invested.
Unless you're trying to retire.
And you know,
yeah, exactly.
Liz Peek, you know, Elon Musk was out over the weekend saying he would hope to see a free trade zone with Europe. He wants to see Europe respond in a way that says we will take our tariffs down. And, of course, that's what President Trump is trying to enable as well. Your reaction to this massive loss in market value in the last 2 days, $6.5 trillion in market value. I want to kick things off with you and your assessment here. Futures are well off of the lows. We're off about 4% from the lows right now. But, of course, this meltdown continues with the Dow Industrials down 800 points right now, and the S&P lower by 104. I agree with you. I think this is a sharp overreaction. What happens next?
Well, Maria, first, I think so many people look at tariffs as a four-letter word, and that they are the worst possible thing you can do for commerce. And that's kind of how we're taught, that the Smoot-Hawley trade war was a key component of the Great Depression. Like, that's false. Right? You had 9,000 banks fail in a very short period of time. 1 in 5 depositors lost everything, and more than 1 in 3 banks failed. That was a financial calamity, and the trade war was a ancillary, if any, effect whatsoever. These tariffs exist everywhere else in the world, in addition to excess trade barriers. Okay, it is only the U.S. where we don't have these things. So you start looking at the math and these recession calls. Okay, outside of Boeing airplanes and defense, if you remove remove that from our exports, we only export about $1.6 trillion worth of goods. So even if that declines by 20 or 30%, okay, a gallon of gasoline going down $1 or $1.50 is going to add 150 to 200 billion back into the economy. You start adding back things like EPA regulations, right? It's Heritage estimate that the Biden, just from the last 4 years, they added an additional $300 billion of cost to the economy in environmental regulations, okay? Those are gone. So any impact, negative impact from tariffs is offset by all these other things going on right now, and not to mention the fact that our consumer drives the world economy. We are going to come out on top in every single one of these trade negotiations. And so when you have this deregulatory environment, in addition to lower cost of energy in the United States, plus these trade barriers starting to be put here, the amount of capital investment coming into our country, all of a sudden you have a mini manufacturing renaissance, which we just spoke about 10 minutes ago, and you start to realize what's going on in the market is not tethered to reality. It is people's knee-jerk reaction to these tariffs are going to cause all this fear. And like Goldman Sachs came out with elevating their calls for recession over the weekend, no mention of all the positive impacts that's happening from the lower cost of energy and how proportional that will be. So look, I don't view these tariffs as a net positive. It's definitely a net negative in the short term, but not 15% off the top of the market.
I totally agree with you, Mike. I totally agree with you. I mean, I just think the market is missing so much here. But how do you explain $6.5 trillion in market value wiped out in action?
Look, the market overreaction is unbelievable, as we've been discussing all morning. But more importantly, for investors out there saying, oh my goodness, what just happened to my portfolio? Typically in every single one of these situations outside of 2008, when you have these sorts of pullbacks, you are significantly higher. 3 months later, 6 months later, 12 months later. Renaissance Macro put something out yesterday detailing just that. And if you look at some of these other drawdowns, so you look at the dot-com boom where companies were trading at 50 to 60 times sales, okay? We are that are unprofitable, not cash flow positive, okay? We are not in anywhere near that situation. And I'm sorry, like, are we on the precipice of a global financial disaster? The net cost to our economy from these tariffs alone on the high side could be $400 billion. Again, half of that is undone by the price of gasoline dropping. This is not a net positive in the short term, but the overreaction is stratospheric.
That's right. And we're probably going to hear Trump make some conciliatory remarks today. We're probably going to have the UK come out and the prime minister there talking about one way or another, because we're going to get agreements with many countries on new tariffs that will be fairer to the United States. What do you say, Mike?
Yeah, look, I agree with that sentiment totally. Right. And just to touch on your earlier point on Scott Bessent, this sucks. And this is terrible that the market has sold off like this. But ask yourself, if we don't do anything now, okay, a year from now, 2 years from now, 3 years from now, when debt service exceeds the outlay for Social Security payments.
Yeah, good
right?
point.
What are you going to do then? Because debt service already exceeds the defense budget now, right? So you're at a point where the level of wealth in this country and the disparity is so far apart that if you don't do something, the problems just get worse and worse and worse until something worse happens in a 15% pullback.
Yeah, and don't forget about all that reliance we have on China for prescription drugs. Really? Yeah. We're just getting started this hour. Quick break. Markets pointing to a sharp sell-off at the opening of trading. We're back near the lows of the morning. Dow Industrials down 941.